let's begin. Hey guys, so welcome. This is Kevin. I got to know Kevin in a EOA event with it's an entrepreneur organization where we talk about how to build businesses, and he was invited as a guest speaker to talk about VCs. So yeah, maybe you can introduce yourself, Kevin.
Yeah, thank you for having me here. My name's Kevin, as has already been said. I'm the founder and managing partner of Indelible Ventures, one of the few VCs operating here in Malaysia. We're relatively new. We've been around for a few years, investing at seed stage across Southeast Asia, but we prioritize Malaysia, Thailand, Philippines as the key markets that we look at. So far, about 2/3 of our activity is in Malaysia.
Okay.
Thus far, and so yeah.
Then my first question is, what do you think is the biggest difference between the culture in Malaysia versus the US? Because you were born and raised in Midwest, right?
Yeah. I was born and raised in the US, in the Midwest. So there's a big difference in regards to the tendency towards entrepreneurship. There's a big difference in regards to the acceptability of failure in the entrepreneurial journey, the stigmas that are attached to it. There's a more supportive infrastructure and ecosystem around the entrepreneurial environment in the US that enables it to be able to encourage more people to take that path.
Okay.
I'm keen on the Malaysia market, but if I'm being bluntly honest, Malaysia is very behind its potential.
Yes, that's correct.
There is a lot of potential, but it's very far behind it.
Do you think if we played our cards right, we could be ahead of Singapore?
It would be hard to displace that, because what's the challenge that you're going to end up encountering is that Singapore has built up over decades and decades things like predictability of the regulatory environment, the legal system.
Things are just more stable. It's
become a financial center, so it's very difficult to dethrone things that are built upon decades of trust and predictability. But I don't think we actually necessarily need to. Like, no one in San Francisco, Silicon Valley is saying, hey, let's put a local stock exchange next door. It doesn't really matter. What matters is building awesome companies. What happens with the later stages can be another thing. Singapore will hold the part of the position because of some of these characteristics around the flow of capital, etc. But it doesn't mean that Malaysia can't actually live up to its potential.
That's correct.
When I arrived into this region, Malaysia was probably number 2 to Singapore.
When was this?
So I've been living in the region for 8 years. I've been working in the region for probably 13. And so 8 years ago, what is that, 2015, 2016?
Yeah.
At that point in time, the rest of the ecosystems were relatively nascent. Malaysia still had things going on. Malaysia had been in the tech industry for quite some time.
I think we had Grab already back then.
Yeah. So you had a couple of things that were starting off at that time period. You had a cohort of companies that were started in 2012. You had another cohort of companies that started in the late 2000s. You even have people that were starting even earlier back then, but that's relatively few and far between. But at the time that I arrived here, Malaysia was easily able to be called the number 2 in the region in regards to the startup ecosystem. I can't say that at this present moment. I can't say number 3, I can't say number 4. It slipped pretty far down the list, even though in my mind it should be capable. All of the characteristics and a lot of the enabling factors, not all of them, are there.
To at least remain number 2, right?
Yeah.
Got it.
To have not lost. If you think about it from corporate standpoint, if you were number 2 and then you slip down, you've lost a lot of market share in the overall region. Now, in normal corporate world, somebody's getting fired.
There has to be some checks and balances.
If you're the CEO of that company, the board or whoever, the shareholders, they're going to come in and be like, guys,
The thing is, here the losers just get bought out, right? There's no skin in the game. You don't have to downside, but you just keep on winning if you do well, right? The taxpayers just come in to build people.
Yeah, I think there's a number of other characteristics. I mean, nobody's going to stay still in the rest of the region.
Yeah.
Everyone else is going to try and work for their own benefits. They have their own characteristics. They have their own entrepreneurs. They have their own reasons, etc. They have their own capital. They have all of these different things that are going on, and so nothing really happens in a vacuum.
Yeah.
And so, in order to maintain that position, you really need to accelerate and enable things to actually move a lot more smoothly. And I don't think that has necessarily been the case. There's some things that are just outside of the control, like Indonesia got very hot, and all of a sudden everybody from everywhere was just playing the story of large population and a massive flow of capital.
Yeah.
And so it sped up their cycle.
Yeah.
They progress many cycles within a much shorter contracted time frame, to where you saw kind of turnover, the aspect of somebody was in a hyper-growth company, spun out, they started their own thing. So the ecosystem accelerated rather fast. You saw similar start to happen in Vietnam when the pandemic hit. A lot of that was hot money and it just kind of pulled back out. But where it's sitting at here is that there's a relatively positive indications. It's just not necessarily getting there.
So when I think about a VC investor, what I think about is this guy who wakes up at 9:30 in the morning, have a cup of coffee, just chill, lay back on his desk, take a look at a few emails and call it a day. That's the life of a VC that most people think about. Do you see yourself more as a VC or a businessman, or what do you see yourself? Because you started your own fund. You're not someone working for a firm and you just get fed by the checks that you get paid. You gotta find your own bread.
No, I never was really the sort of laid back, check out sort of role. I've had roles in the past that it did not use me to the extent of my bandwidth. But to be honest with you, like currently, if I'm not plugged in at 7 a.m., that's a late day for me.
Wow.
So I'm usually an early starter. I'll take some time in the evening to see the kids and do all of this and that. But by the time they go to sleep, 8 or 9 o'clock, I'm back working.
Right. So let's go back to when you first started in Indelible Ventures, right? I assume you didn't start with your own capital.
A lot of my own capital. But in order to start, mine isn't enough.
Right. Obviously, right. You gotta.
So I have to go
LPs.
out. Yeah. Right. I have to go out and raise. So that's a challenging part, because we're in a place where, there's not really local capital. So
local as in Malaysian.
I can't go out into Malaysia and be like, hey guys, I'm gonna work to help support the local ecosystem. Yeah. It just isn't really available. And I'm not Malaysian, so the likelihood of me getting government funds is pretty much non-existent as well. And so I basically had to go out and convince a bunch of people across the globe that this is actually a region, and more specifically the countries that we were focusing on. And when I initially launched, I played much more heavily onto the Malaysia story, to the point to where my own personal brand is pretty much inextricably linked now to the country. I'm honestly trying to decouple it, to be perfectly honest with you. But it is basically linked, because I played it so heavy that there was specific opportunity here that I was out doing a lot to promote the idea of investing here. And so that's a very challenging story, because one of the first things that anybody is going to ask me is, okay, well, you presented a compelling argument. How much local capital is there? Right. And because if you put it from the logic perspective, the foreign capital doesn't just want to be there alone in a foreign place.
They want to know who the peers are.
Well, they want to be paired up with the smart money that's in the location.
Yeah.
Right. So if I'm going to go and put money into any country, it's going to be a similar sort of story.
So it's kind of like, if even the local players are not invested in this one, why should I take that risk?
Exactly.
Like that, right?
if you think of it from a startup.
Yeah.
And say, normally a startup is going to do a friends and family round.
Yep.
If you haven't done that and you go straight to a stranger VC or something, the question is going to kind of come down to, well, if your own mom won't invest in you, I mean, mind you, not everybody has the means. Their family doesn't have the means, but it's kind of the sentiment is the same. If they won't invest in you, then why should I?
Right.
And so the same plays out when you're thinking from these terms of if the local capital isn't investing, then why should I? What do they know that I don't?
Right.
And so that ends up becoming a challenge. And through simply my network, force of will, etc., was able
force
to get...
Force of will. Could you talk a bit about that?
Force of will is just kind of persistence, because you're going to get told no more times than you're going to get told yes.
So in many ways, would you see yourself more as a startup founder as well, in a way?
I mean, technically it is a startup, although I differentiate it a little bit because, you know, I did start and found the company. But in what I do, nothing breaks at 3 a.m. that's going to force me up out of bed.
I'm glad you understand that.
Control. Whereas for your typical startup founder, there's a lot that can go wrong in the middle of the night, and you have to get up out of bed because that's money.
Yeah. So since this is the Builders podcast, before we go into deeper insights of understanding the VC landscape, Southeast Asia, Malaysia, everything, I want to go back to those early days when you were still struggling raising that fund, because that was when you were building actively, and I'm gonna assume that was when things were the toughest and the scariest.
I didn't think I was going to get it off the ground, to be honest with you, because there were a handful of things that all came together. So like, a little bit on the backstory on what prompted me to do it, just to kind of set the stage on it. I was working for another investment fund. And so at that point in time, I was looking at angel investing into some companies around the area just because that's, you know, it was my attention. I was focusing on it. I was doing a lot in regards to mentoring, coaching, and being quite involved.
This was when you were still working as an employee?
When I was still an employee. Okay. At that point, I was doing angel investing, and a bunch of my friends were asking me, "Hey, how can I tag along?" And you know, I'm the type of person. There's a big difference between friendship and business. Where like the moment that we put that line, we need like documentation in place so that it doesn't get confused. Yep. Because I want to make sure that everybody's clear on what's agreed. We can do the handshake and all of that, but we need to actually written down so that no one ends up
just to make sure we're all aligned with
because you know, it's a risky asset class. I understand the risk. I want to make sure that everybody else understands, you know, just to make sure that everything is black and white on paper. Let's formalize it if it's gonna do it. Ultimately ends up snowballing. I start getting more of like media coverage, people talking about me, this and that, because I start telling the story much more frequently about what I'm doing.
This was before you started a VC firm?
So after a few friends of mine, then I said, okay, well, maybe I can get a few more. And then maybe I can get a few more. So I got a little bit greedy. I'm still working for the other company.
Oh.
They knew that I was doing this because I had told them. And as it started progressing, it starts getting a little bit of coverage, and I get a phone call from my boss, and he basically says, Google your name.
Okay.
I Google my name, and the first thing that comes up is the stuff that I'm doing for Indelible.
Oh,
because I already made a name at that point. Because like
via LinkedIn?
Via LinkedIn, yeah. I don't think I had a website at that point in time.
So you pretty much...
So I created a name because I started formalizing it. I was getting some friends. We were getting documentation. So like I have to choose a name. Name's one of the first things that you choose when you're doing.
So just to clarify, there wasn't a, you know, fuck it, let's go kind of moment. It's more like a, you know, I want to do this thing. Let me spread my message a little bit, raise some funds.
There came to this ultimatum because when he called me up and said, Google your name, he said that it's clearly a problem. If I'm an employee of another firm and the first thing that happens when you Google me is that it shows my side activities.
Yep.
You know, like it's fine to have side activities, but the moment that becomes more recognizable than your primary, it ends up becoming I can understand the issue that they had. So he basically gives me an ultimatum and says, you have to choose.
Yep.
And so I left there and focused entirely and put even more efforts into the race
So was it a hard
process.
decision? Because I think a lot of people may have this opportunity to go from working for somebody to business.
Yeah.
I think a lot of people cannot reconcile with the fact that I'm gonna give up my salary. So for you, was it an easy choice? Yeah, I'm just gonna do it, or was it like
Yeah. I mean, it was not an easy decision because at that point in time, I have two small children. So
you already had kids.
having a consistent salary does make a difference when you think about the safety and security and the viability and all of that. And so there's certainly the concern. But no, I mean, it ended up making the decision. And once you make a decision, you need to kind of go all in on it. It's one of these aspects that when you're a founder, you kind of got to burn the boats.
Burn the boats, yeah.
And
have you always had entrepreneurial tendencies in yourself, or is it something that came over the years?
I have. I did a bunch of things when I was growing up in order to make money. And I was always out kind of hustling and this and that.
Like the typical American one where they start lemonade stands.
Yeah. Mowing neighbors' grass, washing cars.
You've done these things.
Repackaging candy to sell it at school.
Very
and
nice.
A variety of different things.
Okay.
So there was always this sort of how can I do something? And then I have a few failed attempts at entrepreneurship. Some of which I was just wrong time.
Right.
Too early for the market. I can say that I was tried to put out a AI startup back in 2009.
Wow, that's crazy.
I had a very it sounds fancy when you call it this way, but it was a backpropagation neural network model for credit risk ratings. Because I was working in distressed assets at the time. Didn't end up getting too far, but I didn't go all in. I didn't burn the boat. So it may have failed because I didn't put enough effort, or maybe I didn't put enough effort because I wasn't getting enough traction.
You were this close to being the Sam Altman. Right? You're this close to it.
I don't think my model was nearly as sophisticated.
Right. But do you do it yourself, or do you
I did
hire?
it myself.
And you did it yourself. So you looked into the models and machine learning.
Yeah, it's not super complicated in order to make.
Right. Cool.
It's just an understanding of kind of the math behind it.
Right. So just to understand a bit clearer, you were doing content on LinkedIn, and back in 2015, that's when it's a lot easier to get eyeballs looking at your stuff. And I'm guessing you were in a way building in public. Would you say?
15. This is now getting into maybe 2020, 2021.
2021.
When I made the switch to Indelible.
Oh,
because I was working at another firm in the region, living out here.
Wait, so Indelible is only 4
years.
years old, right? Got it. Okay,
yeah. We're still young.
Right. So before this, it was just you working abroad in Malaysia, working remotely for another company.
Yeah, I was covering South and Southeast Asia, basically traveling around. So I spent a lot of time here.
Right. And was your mandate Malaysia this whole time?
No. Nothing I do. The very little that I did was actually in Malaysia prior to that. But
so
I
before this,
it was a lot of my time here.
Okay.
Because I spent considerable amount of time here.
Right.
I was volunteering my time in the startup ecosystem, which kind of prompted me to recognize that there was this big gap between potential and what's been realized.
So could you share? Is there more LPs? From Malaysia now today, or are they mostly from everywhere else?
No, from everywhere else.
Minority Malaysia. Is there a percentage you could share?
Yeah. It's a pretty tiny
Less
amount.
than 10%.
Yeah. I would say. Now we're looking at we would have a number of like entrepreneurs, but from like a dollar value, it's not a huge amount.
Right. So as someone who started your own fund, you're very different from a lot of VCs who are working in a fund, right? Because you understand the pains of building something from scratch, doing the branding, doing the marketing, doing everything, right? You got to figure things out, the legal aspects, the accounting. So I guess you could relate to founders who you invest in.
I would like to think so. I mean, every VC is going to say that they're founder friendly, that they understand, that they can empathize, that they add value.
Yeah. No, so I like to ask, right? The VC is always what people see, entrepreneurs see as the dark side. When do you go to the dark side?
Yeah, I mean, I've always been on the investment side since I came out of grad school. So I've always been kind of on that side. But I think it's always played different, because I think people really recognize the difference between the people that actually hustle and put in the work,
Yep.
and the person that whose only capability is access to capital.
Yep. That's a big difference there.
I mean, access to capital is an important aspect of it, because that's the number one job of the VC.
But it's very different when someone builds themselves and just gets shit to work.
Yeah, it's quite different when you have somebody that is actually trying to build, not getting in the way. I mean, my job is not to get in the way. I'm not going to run any of the companies, but I will try and put in the hustle for anyone.
Okay.
My companies probably get tired of hearing me say this cliche saying, "My job is you."
My what?
My job is you.
My job is you.
I would tell the portfolio company, my job is them.
Right.
I'm getting paid to make sure that they're successful.
Yep. Okay.
That is my job.
What's the biggest red flag in just to clarify, you invest in pre-seed, seed stage most of the time?
Seed, some early seed, but generally there's a product in market, which is what I usually would differentiate between pre-seed and seed.
Revenue making company.
Yeah.
Okay.
I mean, we've done a couple of pre-revenue, but the product is made.
Solid product.
And so like the product is out, maybe it's in trials, maybe we're looking at some of the user information, that sort of thing.
Okay, red flags, the biggest one. Is that one?
I mean, the biggest red flag is if a person doesn't actually really understand their business.
Is it possible? I mean,
it is actually possible. You'd be surprised to find out how many people have like a very short-sighted or narrow view on it, and maybe it could be my misinterpretation, because I can't be an expert on every single field.
Right.
What I'm trying to gauge is whether a person has a distinct advantage and a distinct understanding of what the gap in the market is that they're trying to fill, how they're 10x, 100x better, 10x better, or just brand new category creation. And so that requires, when you're doing really early stage, it's much more involved about who the person is, as opposed to anything else. And I talk a lot about how we focus on the people, the process, and the product in that order of importance.
People first.
People first, because the product is going to change.
Why is process above product?
Because I put it this way, and I use the word process just because I wanted another letter P. And I don't mean process being rigid, but I needed the alliteration, right? The 3 Ps. If it was PFP, it wouldn't sound nice. It doesn't sound nice.
No, but it makes sense. But it makes sense, right? Because the people are the ones building the product, and the people are the ones building the process, right? Without people, you got basically nothing.
And the processes are what enable you to iterate the product. Because essentially what I'm intending out of talking about processes is more so feedback loops. And feedback loops can come in a variety, but the main one and the simplest one to conceptualize is user or customer feedback.
Right.
Are they adopting it? Are they using it the way you thought they were using it? How are they using it? Are they activating within what sort of time frame? All of those data points that are coming from actual use case and customers, and even taking some of the no's, taking all of that feedback and putting it back into this process to learn, iterate, and create a better product.
Right.
The product moves so much. Like if you think about, name any major company, and they've gone all over the place. It's been a zigzag, it's never a straight line. So the only way to succeed is the product will change. You need good processes, or better to say feedback loops, but the F doesn't make the alliteration. And the only way that you're going to have that is that if you have great people.
Okay.
And so the biggest challenge around red flag, green flag comes around the judgment around people.
Right. Whether they're good enough to, in a way, fool you to think that they're a green flag, where when it's back, it's just
and it's not that they're necessarily trying to fool me. I mean, nobody goes into something and puts their heart and soul into it unless they believe in it. The challenge is, do I believe it, and do I think that it's VC fundable? Do I think that it is going to give me the scale of return and the probability of the return that makes it worth investing in?
Right.
And it also has to be taken into a context that it's not just, again, like one startup in a vacuum. Most every VC is going to be looking at a lot of really interesting deals. So now you have to compete relative to the peer set of other
That's correct.
companies
Yeah.
that may be doing completely different businesses.
Yeah.
So like, how are you going to be, you may look at 100 companies, 20 of them are really interesting, but I'm only going to do one.
Yeah.
How are you going to, you need to be able to figure out how
you're
can
competing
you be the
with
one
your
that stands
neighbors.
out.
Right. Even though it's not a direct competition, if you're in maybe fintech, but you're still in a way subtly competing with someone.
And I would say that the larger that the company gets, the more globalized that competition for capital ends up getting. When you're really, really early, most of the early stage capital is coming locally.
Okay.
Or it's coming from somebody like me who is pooling foreign capital in order to deploy more locally, because seed is very localized.
Okay.
But if you're trying to raise $100 million, that's a completely different investor. That's a very different.
So how many decks do you review in a day, on average?
In a day, on average, I never put it in day terms. So let me just back into the math and say maybe 3 to 5.
Okay. How can one stand out, like immediately stand out? Is there like a...
So the decks don't usually do it.
The decks don't do it?
Yeah, I mean...
Sorry, before I go into that, how do you get those decks? Is it through email, through referrals?
So a lot of times I'll get cold emailed.
Cold emails.
A couple of those have worked. I'll usually take a lot of meetings from those. If it seems like it strikes a number of the tick marks, a lot of the boxes. Because the challenge with a pitch deck is you only have so many pages plus the email context in order to get enough attention to schedule a meeting. The entire intention out of the pitch deck and that email or that first contact is, can I get a meeting? And so I think that there's a bit of intentionality that sometimes gets lost on the part of the entrepreneur of what is my actual primary objective with each step in the process.
Right.
And so I take most of the meetings when I get emailed. Some of them end up in my spam filter because I'm not sure what happens with somebody's domain addresses, but I've been able to pull out some. Some people will message me as well on LinkedIn and say, hey, I sent you it, and then we'll find it eventually. But the thing about standing out is that there needs to be something, it needs to be enough attention catching to where it's interesting enough that I want to know more. The challenge in a lot of them is I'm not a fan of the pitch decks that have way too much information.
Keep it simple.
Yeah, keep it simple, because what's the primary objective?
To schedule a call.
You want me to want to know more.
Yeah.
You want to give me enough to get me interested to schedule that call, and then I can ask all those questions. You can have a short deck, long deck. You can have a few different sorts of scenarios, but that first point in contact is just wanting to have a conversation, so that it can become more of like a Q&A. Right. That's where the real meat.
It's like trying to get a girl to go out with you, right? You don't want to go in there with all your baggages and everything. Go in there.
Yeah, you're not going to show up for first time that you meet somebody and be like, "You ready to get married?"
Yeah.
No.
I'm depressed. Here's my backstory to why I'm depressed. Right? You want to talk about that?
Yeah. Let's not start with all the baggage.
So what's your typical process like? So the first cold meeting, either someone refers them to you or LinkedIn or email, whatever it goes, and then what happens after that?
So usually there's a handful of conversations. So the fastest that we've moved is probably 2 months.
Oh, is that the fastest?
That's the fastest.
Okay. Is that industry average?
I mean, if you're in Silicon Valley, it can move very fast because the deals are much more competitive. So there's an aspect of take it or leave it.
From whose end?
For the investors, because a lot of the startups there at early stage have a lot of options, because there's a lot more capital at the early stage.
A lot more capital in the early stage. Is that true?
Out
in the
here,
US,
most of the capital wants to go late stage.
Yeah, exactly. It's
but
so different.
Where do you get late stage companies? They have to start early.
Yeah.
And so if you're not incubating, funding, and building early stage companies, you don't have a pool of big companies. not everyone's parent is a billionaire, so we
Yeah.
can't we can't rely upon having the backing.
Right. So you're saying it's a lot more competitive for early stage capital in Malaysia, because in Malaysia there's very little people investing.
There's very little amount
So
of
it's
it. Yeah,
good for
yeah.
you. It's good for you.
I mean, it's okay for me. I mean, the challenge, the flip side of it is that if there's more capital, there's more entrepreneurship, there's more incentive for somebody to leave a corporate job
Yeah.
and come in and be a builder.
Yeah.
And so the only way to build the overall, raise the bar of quality of early stage startups is actually for there to be more capital in the ecosystem.
Okay.
But more capital doesn't come into the ecosystem unless the quantity and quality is to a certain point. So we have a little bit of a chicken and egg.
How do you solve this?
That's a tough one. I mean, I'm doing my part in order to try and help the entrepreneur ecosystem. I do a lot of ecosystem development and a lot of other activities. But it comes down to kind of there's missing factors in the equation.
How do you make the final call? Is it a feeling? Is it you pay someone to do research for you? Like what is it that makes you go like, fuck it, I'm in?
That's a really hard one to kind of nail down. And my LPs will kill me if I just say that it's a vibe check, because like part of it is a vibe check. The truth of the matter is, because what I said was people are one of the most important decision factors.
Yes.
How do you actually scientifically analyze that person? I can have them take psychometric tests. I can put them on electrodes and like study brainwave patterns and all of this. But when it comes down to it, you're trying to gauge whether or not they really understand. You're trying to take some of their existing track record. Have they demonstrated an ability to exceed expectations, to deliver, to overachieve? Are they the sort of hustler? Out here, most of the time, you're going to be getting first-time entrepreneurs. So you don't have the track record of have they done it before. So then how do you recognize whether or not that person has it? It's a very difficult thing to do. I'd like to think that I've developed some capability, but a large part of it is kind of blending these
different traits,
and
right?
then just making the jump.
What's one trait? One trait that makes you think that signals to you that this guy probably gets it.
Aside from the competency, I think the biggest aspect is resiliency.
Resilience.
Because I'm not going to curse on the show, but it's ridiculously hard. It is freaking hard. It is really hard to build a startup. To think of the mentality of a person that goes into something knowing that there's a 90% chance that they're going to fail.
Right.
And probably out of that, 50% is like this glorious up in flames, sort of like everyone knows about it and now you got to show your face, which failure shouldn't be stigmatized. I think that's wrong that it ends up happening that way. But it is ridiculously hard. So you got to find somebody that has the capability in order to deal with all of that. I think it was Tim Ferriss that made the quote, being an entrepreneur is like getting punched in the face every day and still having to get it back up and go to work.
So let me relate to this then. If you see a founder who has been in the trenches for, I don't know, 3 years, and nothing has happened, does that signal something good to you or something bad to you?
So it depends, because I would put it in terms of, are they learning during that process? Because you can look at a number of companies that have become successes, that they struggled for many years and then they found it. And so like the question is of in that journey, have they made enough learnings and is there clear progress in their viewpoint? If you're trying to create a category, if you're trying to do something truly innovative, if you're trying to solve a problem that not enough people are paying attention to, or you're tackling markets that are difficult to tackle, you need some gestation period. It's not super easy.
Right.
Sometimes you get the fortune of timing.
Right.
I made the comment about me doing an AI, trying to do an AI business back in 2009. It was terrible timing. Like it wasn't the buzzword that it is today.
Right.
Today, if I just put .ai, made a website .ai, and boom, I'm going to end up getting funded. It doesn't happen that way, but it's funny to say it.
I like the part where you talked about the gestation period, because anything that's fundamentally new and disruptive and contrarian in nature takes time to kind of marinate, right?
And you might pivot.
Yeah,
most people these days are using Slack, but it didn't start that way. It was started as a completely different company. YouTube was started as a completely different company. Facebook was a completely different company. I can go through the list of every major company that anyone has ever heard about, and there's always going to end up being a struggle story at the beginning. And so, does the person has the ability, and are they putting those processes or those feedback loops in place to where they're getting the learnings so that they're accelerating that? Because ultimately, I believe that it doesn't really matter how long it takes you to get to $1 million in revenue, but it matters a lot how long it takes you to get from 1 to 10.
Why?
Because those numbers are arbitrary. Yeah, it's all good. Yeah. So those numbers are arbitrary in regards to 1 versus 10, and I just use them because they're kind of whole numbers and it's easy for reference.
No, so what you're saying is it's harder to go from 1 to 10 than it is to go from 0 to 1.
No. I would say that the 0 to 1, you're basically trying to figure out product market fit.
Yes.
And so that's a very difficult thing to tackle.
Yes.
Product market fit, you're trying to iterate the product, you're changing it, you're trying to understand your customers, you're trying to do a lot of different things to see whether or not the business can actually be viable. And during that same process, you're trying to test out the go-to-market strategy to develop a playbook that can become replicable.
Yeah.
The reason why I throw out the kind of the 1 million sort of arbitrary marker as the tipping point is because generally that's the point that you're going to be capable of raising much larger sums of money. That's the stereotypical in the US we'd call that's the threshold in order to cross over to be Series A ready.
Okay, $1 million in ARR.
Yeah. I mean, it's a blurry line these days, but
just a best practice.
The old style.
Okay.
The SaaS napkin sort of 1 million ARR is this. You should be getting ready for that, and so. What you should have figured out by that point is that you should have pretty solid recognition that you have product market fit. And you should, at that point, have enough demonstration that you have a replicable go-to-market playbook. Now, mind you, all of this is still things that are flexible and they change over time. But assuming that you've gotten that at 1 million, now your hindrance is, can I just go a whole lot faster? So if you're able to get to that point, you can raise money and then move really fast up to 10.
Yeah.
And that time between 1 and 10 is a really important gauge because that's going to kind of dictate those much larger amounts of money.
Yeah.
Now, again, these are kind of rules of thumb, so it's not necessarily written in stone. But the reason why I say it doesn't matter as much the 0 to 1 is because finding product market fit is very challenging. You might have to take a full pivot. You may have to figure out internationalization. You may have to figure out a lot of different things in regards to raising brand awareness, tweaking the product, et cetera. Whereas the 1 to 10, a lot of that should have been figured out. The hindrance now is just putting fuel to the fire, putting gas in the engine.
Just getting more distribution channels, just going out there, right? Once your core product is done, the 1 to 10 is just
and you still have to iterate on the product because it's not fixed.
Yeah.
But you're going to be much more driven by the sales and marketing or whatever your distribution strategy is.
Tying back to what you mentioned just now about investing only in companies that has the potential to 10x or 100x, is that something that you're very strict about? So what if this company is pretty cool, but you're like, maybe not 10x, 5x maybe?
So let me put it in terms of this way, because like, in economics, they'll oftentimes teach you the concept of expected value. And so if we look at it and say 90% of startups fail, so 10% probable outcome on that investment. So if it's 5x, 10% of that means that my most likely outcome, my expected value is half my money.
Yeah, but you could also say that the probability is no longer 10%. It's maybe a 20% that you get.
You can try and play the odds. Like, one of the reasons in our strategy is that we take a much more hands-on approach. We work much more closely with the companies, is because we're trying to change those odds.
Right.
You know, the way that we look at it is we want to do fewer and more high conviction investments, and that's our strategy. But the probabilities are the probabilities. You can move them, but you can't flip them.
Yeah.
Right?
Yeah.
And so in order to account for the risk level, you do need outsized outcomes still.
Okay.
So 5x is still interesting, but 5x is not a huge return. 5x is not going to offset a lot of the return. So if you think about going 5x, how many years does it take a company to normally be ready to exit? You're usually talking about holding periods of 7 years or more. And so if I think about it from those terms, you know, how long is it going to take? What's kind of my percent return if I'm going to go 5x over the course of 7 years? That's probably something like. What would that end up being, like 15-20% per annum?
A bit more than that, yeah. Yeah. Is that not good enough?
It's not quite there.
Yeah,
it's not quite there. So you're probably just north of 20%. I mean, it's good. It's just not great, because what each successful exited investment is going to have to do is going to have to offset some of the ones that fail.
You need it to cover, right?
Yeah, you need this sort of power law aspect of it, to where you're going to have failures. There's nobody that gets 100%.
Would that then, by default, cause there to be some form of misaligned incentives between VCs and founders then? Because the VCs are like, I don't care, I need you to be my 10xer, but maybe the founder is okay being at 5-6x.
No, it definitely creates a misalignment, and it creates a misalignment when you see some of the investors that just kind of spray and pray, and they create this massively diversified set. They don't really pay attention so closely to them. You have other times to where the distinction of the pressure that they're going to end up having. Inevitably, like some companies are going to be 5x, some companies are going to be 0x, some companies may end up being 50x. I think that my viewpoint on a lot of that is the failures are going to be failures, just because oftentimes nobody makes an investment thinking it's going to fail.
Yeah, of course. Yeah.
Generally, if it fails, you know, there's a number of reasons companies fail, but oftentimes it's related to the product market fit change, technology change, something along those sort of lines that maybe led them to run out of money, that maybe led to a couple of other different things. Sometimes you have the odd scenario where co-founder conflict.
5x is considered a fail?
So 5x wouldn't necessarily be a fail, but I wouldn't necessarily go around bragging about a 5x return on an investment. 10x and above, I'd be telling people about
it. Yeah.
Yeah.
Okay.
Yeah.
So after, let's say, 8 years of holding period, and this company is at maybe, I don't know, 4x, 3x, what do you do then? Do you wait it out? Do you exit? What do you do?
So getting liquidity and getting an exit is a very challenging thing. I think the challenge, especially in this part of the world, is that you don't really have strong IPO markets. The public markets are not very well suited for technology companies as of current. Now, when you think about the long-term horizon that startup investments are, I don't have a crystal ball to say what it's going to look like in 7-10 years. I hope that it's better. The key thing on the public markets here is that the majority of the actors that are investing in the public markets here are very traditional in mindset and very traditional in asset allocation. And so the question is, can it actually support valuations of technology startups? You saw a couple list in Indonesia. They were supported because of a lot of retail trade, etc. They were getting positive feedback from some of the investment banks. But the moment that the lockup periods ended, they crashed as well. I mean, Grab crashed the moment it went into, ended up getting onto NASDAQ.
Yeah.
And their performance was better than Gojek financially. And so there was no reason that they were kind of propped up. But anyways, the public markets are not extremely viable.
What about the more grassroots, the rich people like the Tan Sris and the Datoks and the people who made their wealth through traditional old money, like buildings and selling cars and stuff like that?
Yeah.
Are these people a good audience to kind of get them to diversify into newer technologies and disruptive startups? Or are they still very old school as well?
Still very old school.
So even the private markets are old school.
I can't name very many companies that have been acquired by any of these these families.
You're right. Yeah.
Now, I will caveat that one of the same reasons that I'm bullish on B2B tech is one of the same reasons that a person ought to be bullish on the exit environment related to these same families. Because I oftentimes will talk about, when you look at the majority of the powerful families in Southeast Asia, not Malaysia specifically, but across Southeast Asia, there's a generational transition that's in
Second gen,
place
third gen
right now.
wealth. Yep.
Yeah, because the head of the family at this point in time, and a lot of these families, is in their 70s and 80s.
Yep.
So they're kind of sunsetting in regards to their involvement, and a new generation is starting to take over. Now that new generation, chances are, because of the privilege that was afforded by that business, have been educated in the best universities, be that UK, Australia, US, wherever it may end up being. They've been very well taken care of from an education standpoint. They've been much more broadly exposed, and while not digitally native, they're digitally savvy. And some of them may not want to rock the boat. If it's not broke, they don't want to be the third generation that blows the wealth and is the stereotype of third generation. Everybody's heard that. But I believe you will see the same way that you're going to see some of these folks trying to digitize and bring their family businesses into the modern era with more technology adoption. Right. I do think that you're going to start seeing some of them being a little bit more opportunistic, but at smaller levels, to where I don't think that we're going to see $1 billion acquisition.
But the thing is, it's only going to get better now, right? It's only going to get better because these guys are going to age a little bit more, have more power, have more say, have more experience, and they're going to start.
And then the generation beneath them is going to have more, because the generation that is getting ready to take over, they've already been given more and more as they kind of age. And so your 20-something that is in one of those families maybe doesn't have a lot of authority to do much. They can go buy a super fancy sports car, but they got to get the sign-off in order to do a $100,000 investment. But that'll change as they kind of progress through the years.
Let's talk a bit about personal branding, because I think you do a lot of content yourself on LinkedIn.
I do. Yeah.
Do you use your following for your startup? So you promote your startups that you invested in?
I do. I don't do it probably as much as I should.
Does it factor into the valuation?
No, not really.
No,
so I don't do any adjustments to the valuation based upon the presumption that I'm going to add value to a company.
True eyeballs or true, but it is value.
If I'm invested into them, I have an economic incentive to do whatever I can for free. I'm not a big fan of like trying to charge an investee company for services that I'm providing, because I already have an economic interest to do so anyways. Right. To try and then take money back from them seems pretty negative in my perspective. Right. If I need more money for my operations, I should charge a higher fee to the people that are already paying me to do the job that I'm supposed to be doing anyways.
Okay. What do you think about the founders building their own audiences and building their own following? Or would you say, nope, just shut up and grind? Just build the product, get sales in, don't focus on doing personal branding.
Yeah. So I mean, This is a funny one because like there's two sides of this, because if no one knows who you are, no one's going to buy what you're selling.
Mm-hmm.
So you do have to raise awareness. But on the flip side of it, I've seen entrepreneurs that spend far too much time trying to be in the limelight and aren't really doing anything besides that.
Yeah, the company's not growing, dude.
It comes back to this aspect of not to confuse activity with productivity.
Yeah.
Because you can be very busy doing a lot of stuff, but you need to be able to prioritize what's the most important. Sometimes the most important is going to be brand building. I'd prefer more of company brand building than personal brand building, because that is kind of a signal that you're looking for something else and you're trying to have an escape hatch.
Yep.
But it could be that, you know, that's just the method, that somebody has to be the face, so that's the person that's out there. You know, just because Elon Musk is constantly tweeting like no one's going to say that he's not. It's like he's like one of the defining entrepreneurs. I'm in the fan club, although I'm not 100% on everything that he says. But look at everything that he's built.
Yeah.
Catching a rocket with like toothpicks.
Yeah.
Come on.
Yeah.
But in the beginning, you really need to be able to focus, and he says it as well, that you need to be able to differentiate between what you should be doing and what you have to be doing. And what you have to be doing is what needs all of the attention. Because sometimes there's fire burning, you know? Sometimes you just have to let them burn. You need to figure out
which fight do you want to go for, right?
Yes, exactly. You only have a finite amount of time.
Yeah.
Time is the most precious resource. You can raise more money if you're fortunate enough, but you can't raise more time.
Yeah.
Right?
Yeah.
You can't go backwards.
Yeah.
So I'm gonna maybe sometime we'll invent the technology. But if we had, somebody would have already come back and handed it to us.
Yeah, you're right. No, you're right. That's a good point, right? If it was there already, we would have seen someone coming back.
We'd have this reflexive loop where...
Yeah, true. Yeah. Okay, cool. I'm going to wrap up with a few more questions. So I think early on, just now you mentioned that the US is a lot more mature and it's better in many, many ways than Malaysia. And then you're saying that Singapore is like, you know, the financial hub of Asia, and it's going to be very difficult for Malaysia to overcome it. So why do you choose Malaysia?
I think that there's an opportunity that not enough people are paying attention to.
Do you still agree to this statement after 7-8 years of being here? Because when you came here, we were number 2, I think, but we kind of slacked off.
Yeah. I mean, it's not the. I don't believe whatsoever that it's the entrepreneur's fault that it's lost that position. I don't think it's the founders. You know, I have my own thoughts on where the reason for that lies, but I am still positive on it. But like, to be honest with you, Malaysia is a very difficult place because you need to really get out of Malaysia. You can find really phenomenal founders here, but they're kind of handcuffed because of the ecosystem is not actually designed to support the success as much as it should be.
Could you talk a bit more about that?
I mean, it's part of the enabling environment. You may end up having the infrastructure, but the economy is still the economy. So you need to be able to diversify.
Yeah.
I mean, on one side of it, you can say that it's a small population market, and so by necessity, if you're going to get something large enough, you have to start from a global mentality. You have to start from a regional mentality or something bigger beyond your own borders. But on the flip side of it, there's a lot of cards that are stacked against entrepreneurs from the get-go, just because of the way that the nature of the macro environment is. But from infrastructure, connectivity with the rest of the world, all of these other factors that make it a good place to start and build a startup.
What do you think of talents? Malaysian talents.
Talents are good, but most of the talents end up leaving because of the opportunity and because of some of the reasons that it's not designed to keep them.
It's just the very foundations of running a country is like running a company. You're going to make it attractive so the best people stay, right? You know, I've known so many of my friends who maximize their education system here, went to local universities here, got very good grades, and they just all left to Singapore. It's so common, right?
I mean, isn't Singapore like half Malaysia?
Yeah, pretty much, right? So I think it's such a waste. But I think
it is a waste. It is a waste. But it's the opportunity set. I mean, part of it is inevitable. So like I grew up in the US. People are going to dream of one of two things: to go to New York City and work in the big city, or they're going to dream of like San Francisco, or they're going to dream of something that's outside of their own.
Yeah.
And every state's different. It's a massive place. Like it's analogous from that perspective, because it's quite different culturally and vibe from different part to different part. The same thing here, like a person, no matter whether they're in Malaysia, Philippines, or wherever, they're gonna have this dream about, I want to be in the big city of Singapore because it's the hub, etc. Or then maybe they dream of Hong Kong or London or wherever the case may end up being. You're inevitably gonna have a portion like that. But it's the fence sitters that are kind of on the middle, not really sure, they much prefer. Nobody really wants, I mean, some people do, but not the majority of people don't want to uproot themselves from their family, from their support structures, from everything that they know, and live out the rest of their life around the unfamiliar.
Yeah.
It sounds weird me saying this because I'm doing it here.
Yeah, exactly that, yeah.
But that's why I said most.
Well, if you don't mind, I think it's more a personal question, personal side of things. What made you do it? Like, why didn't you want to just stay in the US and, I don't know, live your best life there? You could still raise funds in the US and you could still technically invest in Malaysia while staying there.
Yeah, it would be very difficult to operate from there.
Why do you want to leave? Why do you want to leave?
When I was building, I had to operate initially from Spain for a while because my visa took a very, very long time.
Visa to Malaysia?
The visa for Malaysia. It took almost a year to get. That was a very long time. So I was trying to do all the initial building while not even being allowed in the place that I'm trying to do.
Got it. So why leave the US? Like, you could have just stayed. You know, it's a lot easier. It's more standard to just stay there.
Yeah.
It's very rare for an American to move to Malaysia. I think. Do you know many who moved here
There's a bunch of Americans
not for work though.
That just moved here for work, but
not for work.
Malaysia has this interesting thing that like it's a very easy place to get comfortable, and the vast majority of the expats don't want to leave. And to be honest with you, that's one of the reasons why I quite like it as well. The only time that I ever end up having any grumbles or gripes or anything is the moment that I have to deal with the government.
I knew it. It's the so annoying, right? Just pay someone to get it done. You just don't understand what's the requirements, and like they reject you for no reason. You gotta go back and forth. It's ridiculous.
Well, right? I mean, to be honest with you, I've had somebody ask me to pay them to get stuff done.
Yeah, I know. It's messed up. Okay, so how do you feel about being a white American person in Malaysia? Is that a benefit, or is it does it do more harm to business?
From the startup community, I don't think it makes any difference. I think that the key thing there is whether or not I'm putting in the effort and work, because it's much more relationship and value add, and are you putting in the effort? It's more meritocratic.
Meritocratic in Malaysia?
With the startup ecosystem. Amongst the founders,
among the normal grassroots people.
Amongst the normal private sector.
Right.
Outside of that, I would say that there's a number of challenges.
Right. Okay. So we're going to wrap up soon. If there was one advice you would give to someone who's thinking about starting their own fund, and one advice to someone who's thinking about starting their own startup, what would it be? It's two questions here.
Starting your own fund. I mean, it's if you think it's hard to raise for a startup, try to raise for a fund. It's a lot harder. If you think it's hard to raise for a fund, try and raise a fund of funds. If you think it's hard to raise a fund of funds,
what's a fund of funds?
A fund of fund is a fund that invests in funds.
Like
they're becoming very popular in Europe and the US these days, especially to invest in early stage, early managers, smaller fund sizes, because you can actually get a lot of alpha from those strategies. But out here, Southeast Asia in general is probably going to lag behind maybe 5-10 years more until it actually gets to that point. If you're wanting to build a startup, just make sure that you have the conviction around what you're planning on doing, because the journey's not easy, but it's very rewarding.
I think everyone has conviction, right? Give me something else.
I mean,
no one goes in thinking they want to fail.
Yeah, that's true. But I've met a few that feel a little bit wish-washy. That when stuff gets really hard, like it comes back to the burn the boats. I want to see that the person is all in.
All in.
I have no plan B. This is going to be what it is. Now, mind you, if it fails, you're going to end up needing something else. But like, you need to go into it with the mentality of this is the only thing.
This is why I'm born for. This is my calling, my destiny.
Exactly,
right?
Exactly. If you can say that, then you can deal with a lot of the challenges, and then it just becomes: are you able to build the special insight and build the product that the market actually wants to delight the customers?
Okay. Well, on this one last question, you know, Nassim Taleb, the guy who wrote the book Skin in the Game, he mentioned this point about how
he did the Black Swan as well.
Yes, the Black Swan. Yeah, he mentioned this point. He's a philosopher, right? So he mentioned this point about how well polished someone looks. The more well polished they look, it's a signal that they're compensating for something not so good, like a surgeon, for example, right? Someone very handsome, good looking, well dressed surgeon versus someone who's a bit more messy, unkept together. Who would you trust more, right? Because there's nothing to prove for someone who's like really good. They don't need to dress up well, so you rather trust the founder who's like messy and in a hoodie and not so well dressed. Do you see a correlation on this based on the founders you've spoken to? Is there something there or no?
I mean, each person has a little bit of a difference in regards to their personal style, so it's hard to gauge. Like, for me personally, it's very rare to ever see me like tuck in a shirt. I'm not, I don't mind wearing the polo, but I'm much more happy in a t-shirt and shorts and flip-flops, know? So like, but every once in a while, the occasion presents, you have to kind of put it on. Some people feel like there's the social necessity and that they're doing it from that standpoint. So I try not to be too quick to judge on.
No, I mean, like, what about the people you invested in?
There's definitely some of this like put on the glossy,
well polished, good looking, well kept. Whereas the other one is like a bit not so well polished, a bit geeky a little bit, but they know their shit, you know.
I much prefer the geeky, know their stuff. I mean, ultimately, you may end up, depending upon what you're selling, you may need that smooth salesman.
Right, true.
Especially if you're doing enterprise sales. You need somebody that can build that long-term relationship. So like, you may need that person.
Right.
But like, in all honesty, it's kind of like we joke where I grew up at of like the used car salesman, where it's like this really sleazy person that's trying to sell you a piece of garbage, but it's really smooth and it like puts the nice coat of paint on it, hiding all of the defects and all of that, and everything's gonna fall apart the moment that you drive off the lot. Your radar kind of comes up a little bit when you get somebody that just is too good at talking.
Okay.
Now, mind you, like if they went to a really good university, they were probably conditioned and taught in order to be very good at debate, having conversations, being able to present arguments succinctly and compelling. And so if it's that, then you may end up saying, okay, well, this is just the way that the person was educated, etc. But it's hard to differentiate on some of those characteristics. Again, coming back to what I said earlier about like gauging people is tough.
Yeah, it is tough. What about pedigree? Like MBA from you? Should someone just do an MBA or no? Just get back to work. I don't care about your pedigree, your background, how you look. As long as you can show me resilience, you can show me your grit, you can show me results, show me passion, right? Does it matter at all if I have like pedigree and
I mean, it matters to a certain extent. It's not the most important.
But it's a signal.
It can be a signal. Like if you're able to get into a top university, it means that you put in a lot of effort in order to get there.
Yep.
Now, mind you, like if you got into a top university because you're a legacy and it was your father went there, your grandfather went there, your great-father went there, it starts meaning a little bit less.
Yeah.
But if somebody worked really hard, I mean, the main thing that you're trying to gauge is like you want to find that outlier. And outliers by definition, there's not a cookie cutter definition to say this is what they look like.
Yep.
And so you're just trying to find that person that is different. Somehow. The pedigree may end up being the same, but what ends up making them different? But if I'm giving advice on whether or not to do an MBA, I did an MBA, but I'd honestly say that like the biggest value of the MBA is more the network that you're going to accumulate from the classes.
Right.
Than necessarily the education itself. The education itself you can learn on the job for the most part.
True.
You can take some free online classes because MIT,
technical
Harvard,
skills
they give
can be
a bunch
taught,
of that.
right? Yeah, it's online anyway. So.
Yeah, exactly.
So what's
but
next?
The network is valuable. Like if you were actually a Harvard Business alum or London School of Economics or name some of these top universities, you've got a pretty good alumni network that you can reach into, and that's actually quite powerful.
Yeah, you're right. So what's next for you?
What
are you looking forward to?
For me is keep on growing funds under management and keep on doing investments and hopefully see our companies continue to grow. Right now, comparing to Carta Data, we're in the top quartile. So I'm keen to continue the outperformance in a market that nobody thought that we could actually invest in and continue to be an outperformer.
Got to get more success stories in Malaysia. An outlier, right? All right.
We hope to be an outlier ourselves.
Okay, thank you so much, Kevin. I think that's about it.
Yeah.
I'm just gonna thank you so much, man.